So today I'm shooting a video with a lender, Andy K is what I call him, with Cardinal Financial. Now it's really important that if you are looking to get a loan and have it be a second home loan for you, or maybe you're thinking about getting an Airbnb and living in it part of the time and doing the second home loan, you have to watch this video. There are huge changes coming down the pipe and this will affect you financially.
Hi, I'm Kelley Norton, your AZ Realty lady at EXP Realty. Count on me for all things Arizona real estate.
So again, I'm Kelley Norton. I'm your AZ Realty lady, and I'm a Valley native and a real estate agent of over 20 years here in the Phoenix area. I help people relocate to and within Phoenix and the surrounding areas. That includes Gilbert, Buckeye, Chandler, Peoria, Mesa, Gilbert, Tempe, you name it, I can help you. But today's video is very, very important. So make sure that you watch the video, subscribe to the channel, click the bell. You'll be notified when I put up new videos. And the best way to reach me is by phone or text. And I have my information on the screen here for you. And of course, my email is also on the page. But best way to reach me is text and phone. So without further ado, I'm going to jump on and do a Zoom interview with Andy K of Cardinal Financial to help you understand what changes are coming down the pipe that will affect you if you are looking to purchase a second home. Okay, guys, so as promised, I have Andy K with Cardinal Financial, and he is here to explain this somewhat crazy change that we're hearing that's going to happen with these second homeowner loans. So there used to not be a big change at all. It used to just be a bigger down payment that you would have to pay, but the rate was the same. Now there's going to be some pretty big changes coming down the pipe, which are going to make you pay. So here is Andy. Hi, Andy. How are you?
All right, Kelley, I'm doing great.
Awesome. So Andy, let's go ahead and kind of break this down for folks. I kind of give a little prelude into the fact that if they were to have a loan that, let's say it closed today and they were a second homeowner or second home that they were buying, that it would just be a 10% down as a minimum instead of like a 5% down minimum, correct?
Correct. That is exactly correct. But
Yes.
the rates would be exactly the same as if they were buying a primary home. That's the only difference, is the down payment.
So it's pretty simple for people to be able to get these second home loans. And now there's going to be some hoops to jump through financially. So let's chat a little bit about that. Now this goes into effect April 1st, technically.
Correct. Yes.
Okay. And if somebody wanted to get a second home loan, they need to close by when?
At least with our company, March 7th. And that's kind of a universal thing simply because it takes time to sell the loans to Freddie or Fannie. And after April 1st, they're changing all the rates. So we wouldn't be able to sell the loan any longer. And that's why we have like the March 7th deadline. So after March 7th, here we go.
Exactly. So basically what he's saying is this is nationwide. This is Fannie Mae and Freddie Mac that are implementing these changes. And this is for everyone. So it doesn't matter if you're buying a home in New York or California, no matter what, these changes are going to happen. And most lenders, they sell a lot of their loans. And so no one's going to want this loan if it has this on there, right, Andy? So it's got to be sold before March 7th to know that it's going to be, or they have to close by March 7th so that they know they'll have time to sell it before this April 1st implementation takes place.
That is correct. And the biggest difference, as you know, which you already mentioned, which is the rate's going to stay the same for normal second home owners currently. That's the way it is now. It's the same. It just costs a little more in down payment. That's the only difference. But starting come April 1st officially is basically when it's going to cost them, on average, when we look this up, it's somewhere between 0.5 and 0.75 points on the interest rate. So if they were going to get 4, now they're going to get about 4.625 or 4.75, which is a significant difference. Or if they want to keep that rate of what the primary house would be, let's use an example of 4%. Now it's going to cost them probably, let's just use an example of a $300,000 loan. It would probably cost them somewhere between $9,000 and $12,000 more to get that same rate that they could have just gotten before March 7th. That's a significant difference. That's going to slow the second home buyers down by a bit. They're going to have to rethink this for just a second, I'm sure.
Right, absolutely. And hopefully, and we've had this conversation, hopefully this is something that's going to, make it a little bit easier for these primary homeowners that are looking for maybe to buy their first home, or, just maybe they're selling their one home and they're going to buy another home, but be their primary. Hopefully this will make it a little bit easier, because it's so hard for buyers right now. They're up against cash investors. They're up against these big hedge funds that are buying. They're up against these second homeowners. So when you look at the the food chain,
Yes.
these poor homeowners that are looking to purchase their primary home, they feel like they're down here with all these other, big guns just, overbearing, and they just can't get anything. So hopefully
it has become, yes, because of the conglomerates and things like that, it has become a David and Goliath situation out there, whereas the first-time home buyer, the young kids, just actually anybody who just can't afford to pay cash at this point, right? I mean, it's,
right.
I see it all the time. I'm the one getting people pre-qualified all the time. And, some people only can get pre-qualified for 200, 250, 300, which used to buy them a home, no longer does. And they don't stand a chance against the people who can offer $25,000, $40,000, $50,000 over asking price in cash. I mean, it's just been tough for sure.
Yes, exactly. So hopefully this will kind of change that a little bit. And again, so what he's saying is that these changes, let's say today you wanted to write an offer with me, and guys, it's February 14th right now, March 7th right around the corner. Like we would need to write the offer today, get it accepted today to try and get it closed before the 7th of March. So pretty much plan on you having to do this. If you're trying to buy a home and have it be your second home, plan on you having these changes affecting you, because it's not likely that we'd be able to get you an offer accepted today. So basically you're going to either have a higher interest rate or more money due at closing, right, Andy?
That's exactly correct. That's exactly correct.
Awesome.
So all the rest of the same parameters still are the same, still the 10% down. All the other parameters stay the same. Now they're just going to make you pay through the nose for it, is basically what they're doing.
Right. And really it kind of seems like it's just getting the rates to be a little bit more like an investor rate. So correct. An investor down, and correct me if I'm wrong. So an investor, if they're doing a down payment, they have a higher minimum down payment, correct?
20% minimum, but most investors put 25% down because it's more attractive to the rates and like the discount points and things like that. It's right. So most do 25.
So really instead of these loans being more like a primary, they're going to be kind of the flip, right? Before it was just the down payment difference, but same rates as a primary. Now it seems like the rates are going to be more like a investor loan, but the down payment a little more favorable than an investor loan.
Correct. That's exactly right. That's perfectly said. Perfectly said.
Okay.
Yep.
All right. Kudos, Kelley.
Good job. It means you got it.
It's the way I break it down in my head. So awesome.
You're exactly
Thank you so much for being on here and helping the YouTube audience understand these differences, because I know this is going to affect a lot of people, especially with Arizona being such a hot market for those second homeowners, the people that love to come out here for our 5-6 months of the year that are just splendid with weather. And it's just definitely gonna affect that. So thank you so much for being here.
You're very welcome. All right. Have a good one. Take care.
Thank you.
All right. Bye-bye.